What's going on, you guys? In this video, I hop on a one-on-one call with one of my private mentorship students who asked me an extremely powerful question. Andrew, what is it that you're looking for when you get onto the charts? So I broke down my full trading process, how I approach the markets, how I mark up my charts, and how I use multi-time frame analysis using ICT concepts to mark out previous swing highs and lows, order blocks, fair value gaps, breaker blocks, everything from even my trade management to when I'm getting out of a trade, when I'm entering a trade, everything specifically step by step. Now, I don't normally share these one-on-one calls. However, this was too valuable not to post. And if you stick around to the end, I have something special for those of you guys who are not only serious about leveling up their lives, but also want to level up their trading. So if you stick around to the end, you'll be able to see exactly what I'm talking about. Let's get right into it. The first thing that I do every single time I get on the charts, we're gonna use NASDAQ as the example. I've completely cleared off all of my charts, okay? Is that I mark out I separate on the 1 hour chart. So make sure you're on the 1 hour chart. I separate the different days of the week, okay? So this is, for example, Tuesday, we have, so Sunday starts at 6 o'clock p.m. Eastern Standard Time. And then I'm just gonna mark out every single day of the week. Okay, we're gonna go here, we're gonna mark out this. So this is Wednesday, we have Thursday, and then we have going into Friday, and then Friday closes at 4 o'clock, but I'm gonna go ahead and mark out the next Sunday. Also, one thing that's extremely important, you wanna make sure that your charts are set on UTC -4, New York time, depending on the time change that we're currently in, daylight saving time, it might be UTC -5, but for right now, it's UTC -4 New York time. Regardless, make sure it's set on New York time. The reason why we do New York time is because IPDA, the Interbank Price Delivery Algorithm, okay, is centered around New York time. Now, there's two key components, two key times that are extremely important when it comes to the new day. Okay, the first one that we have is called the true day open, which is at 6 o'clock p.m. Eastern Standard Time. Okay, now what this indicates is the formation of a new daily candle. So if we go into the daily chart, okay, if you see the opening price of any new daily candle, so for example, in this bearish context right here, the daily candle is going to open up at the top, okay? This price opens up at 6 o'clock p.m. So that means Asia session the day before the current day in which we are currently at, okay? However, our days don't start at 6 o'clock p.m. Our days start at midnight. So I like to mark out both of those. So I mark out the 6 o'clock candle open, which is 1800 opening price. 1800 is military time for 6 o'clock p.m. Eastern Standard Time. So you'll see here, okay, we'll use, for example, Thursday, okay? We'll mark out Thursday's price action, okay? So on Thursday, we can see here, this was 1800 opening price right here. I will just simply mark it out. I have already a template saved for that. And then I also like to mark out New York midnight opening price. Okay, so I have New York midnight opening price right here. Now, the reason why I do these two prices is because this is the opening price at 6 o'clock p.m. And then this is obviously our New York midnight opening price. Okay, so this is the New York midnight opening price. It's a measure of premium and discount. So ideally in a bearish context, you want to be selling above 1800 and New York midnight opening price. Now, as long as price has already been above it during the time, so for example, you can still sell here even though we're beneath it, as long as price has already been above these areas, okay? Because you have to imagine, okay, the daily candle, okay, PO3, every candle, almost every candle, I'm not gonna say every single candle, but almost every single candle has the opening price, it forms a wick in the opposing end, so the high of the candle, and then we have the low of the candle, and then we're gonna have the close, okay? So if you can imagine, okay, this was the opening price of the candle, okay? The closing price of the candle was where? Where did price close? Let's find that closing price. Price closed right here, okay? So if this was a bearish candle, okay, that means that during this time, price went all the way up as high as here. Hold up, let me remove this magnet. Price went all the way up as high as here. And it went all the way as low as right here. So that's how that daily candle looks. Okay, imagine this is how the daily candle looks. On this given day, this is how the daily candle looks right here. And we're able to tell that simply based off of these opening prices. So you can see price opened up, we formed the high of the day, and then we came back down to the opening price. We came all the way down, putting in that low, and then we ultimately closed right here. Does that make sense?
Yeah.
Cool.
That's interesting. I think I never saw this kind of explanation in your other video, right?
I explain it briefly. Briefly, yeah. And in almost every single video, I do explain this concept, but I just went into it a little bit more in depth. Okay, so after we've marked out New York midnight opening price and 1800 opening price, what else do I like to mark out? I like to mark out key session highs and lows. So in this scenario right here, this is going to be London high, okay? The 3 o'clock, so we're gonna mark out London high right here. Let's make this London high right here. We don't need to mark out Asia high because it's already been taken. And then we don't need to, Asia low at this point is right here. So this was Asia low right here. Asia low is right here. And then what else do we have? This is our previous day's low. So this is our previous day's low right here. Oh, we're gonna make this on to the left right here. Previous day's low right here. So now we've marked out a few things, okay? Now, obviously, NASDAQ is at all-time highs, so we can't just keep pumping forever, okay? Once we saw price fail to put in a new high above London high, we respected this order block right here, okay? Immediately in my head, I'm thinking, what are we gonna do? We are going to now start to push lower. Okay, so we have this 1 hour bearish order block right here that we can mark out. Okay, we've marked out this bearish order block, so you can see how price is respecting it. Now, once price violated here, we now had a change in the state of delivery on the 1 hour chart. That is now indicating to me that we are now going to fill this imbalance. Also, if you notice here, we had a new day opening gap. A new day opening gap is simply going to be a gap that is formed by 1800 opening price. We gapped up. So this is essentially the draw. Once we violated it, okay, I also see that we have this large order block right here. Okay, on top of that, this order block, we have this large order block right here. We also have this imbalance right here. So I'm expecting all of this to get filled. Okay, so how could we have framed a setup off of this area? Let me go ahead and cut all of this, and we have that change in the state of delivery already marked out. So if we start dropping down into the lower time frames, and I'm going to use the 5 minute, I'm not even going to drop down into the 1. So right here, what we have, okay, we have London high. We see how price is now trading up into that order block that we have outlined on the 1 minute. Okay, we've also, on the 1 hour, we've also now just swept internal range liquidity right here. Okay, now notice what's happening here. Okay, price is failing to close above this high. That's a good indication that we're likely going to push down lower, especially, okay, if you notice what happened here. Price came up, we came down, we pushed up, and then now we broke down lower, we broke structure here. Now we're just coming back into here. So I'm expecting price to come back down here. But as of right now, okay, it's a bit risky to just enter into a trade. Obviously you can, if you have the understanding and the experience, you can pull the trigger right here immediately, but it's best to wait for there to be a higher time frame changing the state of delivery. So we're gonna go ahead and play some of this price action. You can see here, boom, perfect. Okay, oh, well, I kind of played it out a little bit too quick. Okay, but essentially, let me go ahead and cut right here. Okay, what am I gonna do? Okay, and this is something, it's a bit advanced. It's gonna be quite difficult for you to kind of get in on here, but right here, right as I see these failures, okay, what am I gonna do? I know that there's this low right here. Okay, once I see price push through this low right here, immediately in my head, I'm thinking, okay, we just displaced lower, I'm trying to get in. So what I'm probably gonna do is drop down into the 1 minute time frame, and I'm gonna wait for price to come back up into a specific area. So let's just see what we have here. Okay, cool. Price pushed up. We now have a small order block about to form. Again, I don't know what's going to happen other than the fact that I know we're going to go lower. Okay, but what I'm going to do is I'm going to get in right here. Okay, as I see here, because this entire area is already entirely rebalanced. So for a safe stop loss, I'm going to keep it above here. For a safe stop loss, I'm going to keep it above there. But where am I targeting? I'm going to be targeting on the higher time frame. I'm targeting, for example, these lows all the way down here. Okay, I'm going to be targeting this low right here. We'll see if we can get down to this low. Obviously, we know we've already seen it. And then first target is going to be obviously right here. So again, the reason why I have my stop loss here is because this area is entirely rebalanced. There's no need for price to come up here. If I get stopped out here, that's totally fine. Let's go ahead and place a sell right here. And I'm going to drag my stop loss right here. So even if I take a loss risking 1 mini, I'm only going to lose $240. That's not a lot of risk. Okay, and I'm targeting, first target is right here, 1 to 2 risk to reward. That's great. Let's go ahead and play it out, okay? And I might get stopped out here, and that's fine. Okay, but again, we're just watching and monitoring price. Boom. Okay, right now we'd be up $600. So again, what we can do is we can go to the 5-minute chart and monitor our position. So at this point right now, what I would be doing is I would be trailing my stop loss and profits. Why? Because we've already displaced. I no longer want to see price come back into this area. Okay. The next area of interest that I have is going to be this low right here. Now we did get some resistance in this area simply because of this order block that we are starting to encounter. We also have this fair value gap right here, this order block and fair value gap that's outlined right here. I outlined both the fair value gap and the order block together collectively. You can see here, price hit it. Now, just because we hit this area doesn't mean that price is going to immediately reverse and push up, okay? It just means that we're getting some resistance. So I'm expecting prices to continue to push through, okay? Even, you can see here, okay? This candle that we trailed off of on the 5-minute is also an IOFED. An IOFED is called an institutional order flow entry drill. It's going to be a sweep of a high into an imbalance right here. Typically, whenever we see IOFEDs, you don't want to see them disrespected in that current price run. So that is a great example of great, price action right there. So we're going to continue to push and see if, okay, boom, straight down lower, straight down low. It just, in that 1-minute candle, boom, straight down to our TP right there. So at this point right there, you can either continue to trail, or what we're going to do is we're just going to flatten the position, and you would have made $1,600 off of one contract. Price just went straight down to your TP, 300 ticks all the way down there. Obviously, we had Asia low right there, but again, my TP was right here, so I went ahead and got out. But do you see how I was able to take the higher time frame and break it all the way down based off of my understanding of certain things? Does that make sense?
Yeah, definitely.
Wonderful. Do you have any other questions for me?
Yeah, well, this explanation explained me like more questions that I already had. So let me see what I got here. So one question that I had is like, what do you look for when you're trying to enter a trade? Because, for example, me, like in the same example, like as you said, there was like a 1-minute order block, if I'm not wrong, and you said it might bounce, but it did not, right? So my thing is like sometimes when I do enter a trade, it runs through that order block, or it just doesn't bounce off how as I expected. So what would be like key things that you would look for to actually enter the trade and not just mess it up?
Well, again, everything that we just went over. So again, you might have to go back and watch this recording. I literally just explained everything that I was looking for. We had a failure. We had a failure swing. We had a failure close above here. So that's telling us, okay, we're not creating new structure above previous highs. When we're not creating new structure above previous highs, and that means that whenever we pushed above here, that was simply a sweep of liquidity. Okay, on top of that, we've already taken out buy side, we've broke structure to the downside, and then now we're simply retracing up. So I'm expecting price to come back down. On top of that, we're also respecting this 1-hour order block. And then we also have this new day opening gap right here, and we have all of this resting sell side liquidity. We're also beyond extended on the daily chart. We're above New York midnight opening price. So I'm building up all of this narrative, okay, so that we can not only see, okay, this is what we're looking for, but what can we expect to occur as well? And how can we position ourselves to get in line with exactly what we're seeing? Does that make sense?
Yeah, it does. It does. Perfect. Yeah, yeah, it does. It does answer my question. So, okay. Okay, one question that I do have is sometimes I've seen like obviously price reacts to fair value gaps, order blocks, and all this type of things, right? So one thing that I did not really understand it was like how is it possible for price to react to a fair value gap or an order block like multiple times?
Yes, yes, of course. Ideally, you don't want to see price come back into the same PD array more than 2 times. If it does, it's fine. It can happen, but ideally, like it should take 2 times for it to push away from it. Otherwise, it's likely going to get disrespected.
So it's like for the second time when it touches that, let's say like fair value gap, would you say that would be more like a confirmation?
Not really. So if price comes into a fair value gap after already having been into it, ideally I'd like it to sweep the first time it went into it, especially if the first time we went into that fair value gap, we were under the 50% of it. Okay, maybe in the first 25% of that fair value gap in a bearish context, I'd like to see that fair value gap. I'd like to see price take out that high. So for example, let's just say we have an imbalance right here and price comes back into it here and then we leave and then we come back into it again. I'd like to see that first tap into it taken before we then come back down. Does that make sense? Imagine like we had a fair value gap within this area of price. Right here, I'd like to see this high right here taken. Does that make sense?
Yeah. So would you say it's better to wait until?
Well, we don't know. So we don't know if it's going to tap it. So what I like to do is just enter off of like either the opening or the 50% of every single PD array, whether that's an order block or a fair value gap. I'm always going to get in on the opening price or the 50%. Or what I'll do is if I'm, for example, trying to enter in with 2 contracts, I'll get in at the opening price with 1 contract, and then I'll get in with another contract at the 50% so that I average in around 25% of this PD array.
Okay, because one problem that I've been seeing that I've experienced with, let's say that I enter a trade, let's say in the opening, right? But it goes until like the fair value gap until like the 25%. But when it bounces back, it stops me out, but it still goes to the 50% off to bounce back again how I wanted it to be.
So you need to, your stop loss needs to cover the whole fair value gap. So what I like to do is if I'm entering off of a fair value gap, I'm going to place my stop loss. Let's just say you entered in right here. I'm going to place my stop loss above the candle that formed that fair value gap. Okay. You don't want to put it within a high within that fair value gap because again, it could get swept. So you want to have your stop loss to account for that entire fair value gap.
So it would be better if I go to like a higher time frame to
yes, correct.
The stop loss.
Yes, correct.
Okay. Yeah, because that's one thing that I've been doing. Like I try to put the stop loss, but sometimes I think I put it
too close.
Too much in the lower time frame.
Yes. Correct. If you're entering off the 1 minute, okay, but there's a fair value gap on the 5 minute that's above where you entered, you're likely going to get stopped out. So you need to have your stop loss. Either you need to wait for that 5 minute fair value gap to get hit, or you need to have your stop loss wide enough so that it accounts for that 5 minute fair value gap so that you don't get tagged out. And if that means that you have to decrease your size, then that's totally fine.
Okay, perfect. Perfect. That responds to my question. So, okay. So one question that I had is like, for example, on different timings. For example, my timing usually on weekdays is let's say like Monday to Wednesday. Basically available like until 11 a.m. So
okay.
What time do you recommend? I've heard like you recommend sometimes trying to do pre-market as well.
Not always. So with Nasdaq, don't trade pre-market. Just wait till market open. I'd say you should be done. You shouldn't be trading past 11 a.m.
So it should be good. Like if I trade between 9:30 to 11,
That's
it's like
more
an
than
hour and a half.
enough. That's more than enough.
Okay, perfect.
Yeah.
Well, I wanted to ask you more about change in state of delivery. I mean, I grasped the concept, but I'm still like a little bit confused. So if you can like elaborate a little bit more into it.
So yeah, a change in the state of delivery, what it demonstrates is literally the state of delivery means where are we seeking? What is the liquidity that we're trying to deliver to? So in this context right here, okay, price was delivering to buy side, okay? We're in bullish order flow, okay? We then took out buy side liquidity, okay? But then once price starts disrespecting the original up close candle that initiated that move, we've now shifted in the change in state of delivery. We're no longer seeking buy side. The job has already been completed. I'm now expecting price to come back down lower. But this was a higher time frame change in the state of delivery right here. So once price, because if we were actually going to push up through these highs, this candle would have never closed here. We would have continued to push up, but that's not what happened here. Okay, so we failed to continue up higher. We failed to close above this blue line right here, and then we pushed down, changing in the state of delivery as we were closing through and pushing through the bottom or the opening price of this up close candle. I appreciate you for watching this video. If you're not already subscribed, go ahead and click that subscribe button. Comment down what videos you want to see next, whether that's trade breakdowns, lifestyles, whatever you want to do. I am here to help you guys learn and grow. So go ahead and comment that down below. Share this video with someone who you think might need some help. If you want the exact risk management protocol that has helped hundreds of my students go from being inconsistent, unprofitable traders to now making $10,000, $15,000, $20,000 a month. I had a student last month make a $50,000 top step payout. I have a lot of students getting payouts every single day, every single week, finally becoming financially free. If you want the exact framework that took me from working as a server less than 2 years ago, making $18 an hour, to making $50,000 to $60,000 a month, consistently every single month, the link is going to be down in the description. And if you're truly serious about leveling up your life, you want to work with me one-on-one, the link is going to also be down there below. And if you do qualify, if you do find yourself a good fit to work with me one-on-one, I'll be happy to take you on as one of my students as well. But yeah, that's going to be it. That's going to be a conclusion to the video, and I'll see you guys in the next one.